Greetings Accounting 1 students. This is going to be our second screen capture video, and what I want to do first is to complete this worksheet for Tammie Tubooks, and this problem is very similar to problem 15A. So just a few things in Excel for the time being. The observant student will note that these numbers and this abbreviation for September are not centered. If I want to center something, I go up here, it says center your document, click, and everything that I had highlighted is now centered. If I want to underline something, I can use this over here, and now we have everything underlined. Now what I notice with a lot of Accounting 1 students is they try to squeeze accounts receivable into one column. The problem with that is, let's see what the problem is. The caption is wider than the column, so that's why I have accounts on row 2 and receivable on row 3, so I can get the two words in there without having to make the column larger. Suppose I did want to make the column larger. You can just grab the right side of the column there and slide it over, and now you have a wider column. When you have numbers that are there's too many numbers in a particular column, it shows up as a bunch of, I believe it looks like this, something like that. That means your column's not wide enough for the numbers. Alright, so these are the headings, and you already have this stuff, right? So what we want to do is fill in the beginning balances. Now Jill Jones was a brand new business, so her beginning balances were all 0. 99.5% of the time you're not dealing with a brand new business, you're dealing with an ongoing business. So let's put the numbers in. Got $7,500 for cash, $11,400 for accounts receivable, $1,100 for supplies, $5,200 for office equipment, and $3,800 for accounts payable. Okay. Now you can see these numbers all have a comma. So let's see. What if I just type in 7,500 over here? I don't like the way that looks personally, so I can click this over here. That gives me pennies, and I don't want pennies. How can I get rid of those decimals? I come up here and click it a couple of times to the right. Now, of course, I can do the whole thing in one shot. I could just highlight everything here, click this comma, and then get rid of the pennies, all in one shot. Okay. For me, it makes it easier to read. Okay, the observant student will notice we're missing a number here. So you, being the star accounting student that you are, realize that this is an accounting equation, and the left side, so I'm just going to add the left side up, and then I'm going to subtract out the accounts payable. That should be my missing number. Accounts payable being on the right side of the equation. 21,400. Similar procedure is required for problem 15A. So that's our starting point. Now we go through the transactions. Okay, let's see. Purchased office equipment. Looks like we got more office equipment now, so you add $1,500 to office equipment. Did we pay for it? We did not. So what does purchased office equipment on account mean in English? It means that you now have an account payable. Purchased on account. Okay, next on the hit parade, paid office rent. That word, it's a 4-letter word. To me, it's a dirty word. Subtract $2,500 from cash. There's no other interpretation of PAID. Okay, what did we pay for? We paid rent. Rent is a cost of doing business, and we'll give it a really creative name like rent expense. Now I'm labeling the stuff over here In the textbook, they spread all this stuff out, which I do not like. So I'm going to label everything here, so when I go to do my financial statements, I will know what these items are. I won't have to reinvent the wheel. All right, what happened next? Tammie takes $7,000 out of her Beauty and the Beast pillowcase, puts it in the checking account. That increases capital. That's one of the four things that we know can happen in this column. We call that an investment. All right. Next, PAID. See that word? You want to reduce cash. What do we pay? We pay creditors on account. Who are they? That's who they are. That's the accounts payable. Creditors on account. Subtract $3,300 from accounts payable. You owe less money now, so you want to reduce that liability. All right, moving right along. Paid $700 for supplies. Once again, PAID. What'd you get for that? $700? You got supplies. Add $700 to supplies. On the 13th, return defective supplies, and we got a $100 refund. So add the $100 to your cash column and reduce the supplies column because you returned the supplies. You have less supplies now. September 15th, receive cash from cash clients not previously billed. So we receive cash, add it to your cash, and go over here and drop it in. They were not previously billed, so that means that at this point you are earning the revenue and collecting the money simultaneously. I'll give it a name for my revenue, fees earned. We love these people, right? You do the work and you get the money immediately. All right. What's next? Paid. Reduce cash. Monthly insurance bill. Sounds like a cost of doing business. That should have been a reduction, right? What are we going to call that? Insurance expense. Expense paid in cash, so that's the same thing as we have over here, it's just a different expense. And you want to reduce capital, right? There we go. So now we have three of the things that can happen in this column. We have expenses, we have an investment, we have fees earned. There's only one item left, which we'll get to. Okay, next, received and paid a Verizon bill. Subtract $290 from your cash. Subtract $290 from your capital column, which is owner's equity. And what do we want to call that? Telephone expense. There we go. On the 23rd, what happens? Receive cash from clients on account. Add the $8,800 to cash. What are clients or customers on account? Those are people that you billed at some time in the past and now you're collecting. Reduce the amount owed by your customers or clients. That's received cash on account. So part of our Chapter 1 learning experience, when we see transactions described in a narrative, we want to basically understand what is happening. So this one, what do we understand? Receive cash from customers or clients on account, increase your cash, decrease your receivable. Next, PAID, minus 600. Subtract it over here, cost of doing business, automobile expense. 26th. Recorded utility bill to be paid in October. Now we're in September. All right, so this is like the Jill Jones transaction where she got the Verizon bill and elected to pay it in the next month. So we now owe, since we just got billed, $750 more than we did earlier. And what would the utilities be? That's right, that would 28th, billed clients for services rendered on account. There's no cash in there, right? What do we have instead? We have an account receivable. So billed, charged, or invoiced clients or customers is going to be an increase in accounts receivable. And why would you be billing them? You'd be billing them because you did some work. Fees earned. Yeah? All right. Next, withdrew cash for weekend in Atlantic City. Bad idea. Subtract from cash. Let's see, Atlantic City. Is that going to be gambling expense? You're saying, of course not. That's going to be what? Drawing. Some small businesses, they have difficulty discerning whether it's an expense or it's drawing. All right. On the 30th, the last transaction, physical inventory supplies indicated that $700 worth of supplies are remaining. So let's see what we have in this column. We started with $1,100, bought $700. That'd bring us up to $1,800. We sent back $100 worth. So this column right now is $1,700. And we just counted up what? $700 worth of supplies are left, which means what? It means $1,000 worth of our supplies have slid away. Now when you use up supplies, it sounds like a cost of doing business, doesn't it? So we'll call that something creative. Supplies expense. All right, so now I have all the transactions on the worksheet. Hopefully I didn't screw anything up. And we want to add up the columns now. So let me just get rid of this here for the time being. So if I want to add this column up, there's a number of ways of doing it. And this first one I'm going to show you wouldn't do. You could add the cells individually, which you want to do sometimes when you only have a couple of 3 cells to add. You could do this, right? You're thinking, wait a second, that's going to take forever. All right, so under these circumstances, and I use this function like a zillion times, I'm going to go equals sum, open bracket. All right, so I'm going to use the Excel function equals sum, open bracket, and then I'm just going to highlight what I want to add up. I want to add up this whole column. I get a total, $19,410. Now, do I want to do that 1, 2, 3, 4, 5 more times? No, I don't want to do that. So this is what I'm going to do. I'm going to copy this, and this is a function you do 1 billion times in Excel. And there's a number of ways to copy a formula. There's my way, and then there's a whole bunch of wrong ways. Just kidding. Okay, this is what I like to do. I go up here, I click the copy icon. Now I got this thing going around here, clockwise. And then I highlight where I want to copy the formula to. I want to copy it to the next 5 columns. And then I press enter. And it added all the columns for me. So that was the K column, right? So in Excel, if you copy across a page, what it's going to do is it's going to advance the formula for the particular column that you just moved into. So this last column is the P column, and you can see that's the formula. Sometimes you don't want it to do that, and you can freeze the formula. We don't need to do that right now, but it's there. It exists. Now you're saying, well, where's my double line and all that stuff? Well, you can go up here if you want to dress these things up a little bit. And if I want a double line underneath each, I would do that. You go up here to do that. There's a variety of different things you can do. All right, now we have a completed worksheet, and we're hoping against hope that it adds up, right? We got $19,000 in cash. Our customers or clients owe us $15,100. This number agrees with the physical count, right? 700. We got equipment, we owe some money, and there's our capital. All right, so what did we do with Jill Jones? Well, the first thing we did was the income statement. So let's see what we have. What we have is nothing right now. So I'm going to set up an income statement. And what is the name of our company? Tubooks Accounting Services. It's already centered, but if it wasn't, what would I do? Just click this over here. What's this going to be? It's going to be an income statement. And for an income statement, you have to indicate the period covered. So we're just doing a month here. So I'm going to go with for the month ended September 30. Let's go with 2020. 2020. And we'll go from there. All right, so there is our heading. It's all centerized now, right? So, now what do we do? Well, for an income statement, you want revenue and expenses only. So, let's see, let's do this. Put revenue over here, and we only have one kind of revenue, and that's fees earned. Whoops. Got to capitalize that or I won't be able to sleep tonight. There we go. Now we had two transactions involving fees earned. So we're not going to list them individually, we're going to add them together. What do we have? We have our favorite kind of client, right? They paid us in cash. And our not so favorite kind of client, we've got to wait on the money. Now, what did I just do there? I just accessed those two cells and added them together. Now, that's a very simple formula. It says add P11, this is P11, right, to P17, and put it over there. Now, if I just type in P11 plus P13, something like that, nothing happens, right? So for a formula, you need to put in an equal or a plus before you start typing in the cell references. So if you look at it, you see that's 11 and 17 plus P11 plus P17 gives me my total of 19.2. And the Excel added in this little equal sign. I could have put an equal sign as well. That would have worked too. So either an equal or a plus before your formula. Otherwise, it just thinks it's some type of text. All right. Then we got our, let's call them operating expenses. I'll underline that one. And I'm going to put them, or attempt to put them, in descending order. So I'll put the largest expense first. And what is the largest expense? Looks like the rent, right? So I'll go with rent. And then second's going to be supplies. And then third's going to be utilities. And we'll go from there. Okay? Now, in the real world, of course, this is all going to be done on a computer using accounting software. The accountant typically will configure the software to print out the expenses in the desired listing. And typically, you're going to put what? You're going to put the more important expenses on the top. All right, what do we have next after utilities? Automobile, insurance, and telephone. Now, this is not a super important thing. but here it is. Okay. Now I'm just going to go fetch those numbers. So I put a plus there. Then you go after my, oh, I'm going to have to put a minus because I want to change the sign. So I put a minus there. I'll pick up my rent expense. So a minus and a minus is going to give you a plus, yeah? Let's pick up the supplies, that's over here. Let's pick up the utilities. That's over here. Auto, 600, that's over here. Insurance. Finally, telephone. Okay, that should do it. I'll put a line under here, bottom border. What do I want to call this? Total operating expenses. I want to add these up, and I want the total over here. I'm going to deduct the total expenses. Do an equal sum, open bracket, highlight what you want to add up, 5440. So our revenue far exceeds our expenses, which makes us what? Happy as hell. We have what? We have net income. I'll take the 19.2, subtract the 5440, 13,760. I'll put the old double line under there. So a double line means you've reached the final total. There's nothing else going to be added or subtracted to from it. Okay then. Now we got the net income. The next thing we wanted to do, which we did in Jill Jones, is to prepare a statement of owner's equity. A statement of owner's equity is going to tell you how you went from here, 21,400, to here, 39,160. That's the story of owner's equity. Okay. So 21.4 is our beginning number, yeah? So let's drop that one in there. Well, first of all, we need a heading, right? I'm going to steal this heading. So I'm going to copy all three of those items. My copy icon, yeah? Hit enter. This is not an income statement, it's a what? Statement of owner's equity. Okay, what's the starting point? Starting point is TT capital September 1, 2020. I'm going to go fetch that number. That's the $21,000 number, right? Plug that in as my beginning capital. All right, now, what happened during the month? Well, we had an investment, yeah? 7,000. So I want to add that in. That obviously increased my capital. I did not have this in the Jill Jones example. The investment was made in the preceding month. So here we go, 7,000. Let's drop that in over here. Investment. That's a positive number. Go fetch that number. Okay, we got it. Now, what else happened in that column? Well, there was a bunch of transactions involving revenue and expense. And those transactions are all included in those numbers, yeah? So we're going to list these over again? You're thinking, no, of course not. It's going to take the total. the month. Let me pull that number down here. And I got 13,760. Now I could show you three different ways of adding those three numbers. Now there's only three numbers, and make believe there's 10 numbers. I could do this, which wouldn't be that hard to do because there's only three cells, right? All right. I could do my equal sum thing. Get 42,160. And what else? I could use this auto sum sigma up here. Just click that. It adds everything that's above where you want the total to be. Any way you slice it, you wind up with those three cells added up together. That formula or that function only works if there are no spaces between these numbers. So let me show you what I mean by that. So what do I got here? 1, 2, 3, 4, 5, 6 twos. So obviously the total is going to be what? You say 12, of course. All right. Now, what if I wanted to add these numbers together, but there's only 5 twos? Well, you can see that by getting rid of that 2 over there, now I have 10 and only have 5 twos. If you use that auto sum function, the observant student will note it stops when it finds a blank space. So therefore, once again, if you want to add a column, and you want to use this function up here, there can't be any spaces between the numbers. All right. What's next on the hit parade? Little trip to Atlantic City. Less drawing. And that is $3,000, yeah? Which if we subtract, you could show it as a minus if you like. You get 39,160. And that's the capital at the end of September. So both the income statement and the statement of owner's equity are a period of time, which is in contrast to a balance sheet, which is at a specific point in time. So let's go put together our balance sheet. I'm going to steal this, but I'm going to have to edit. This is going to be a balance sheet, which is nothing more than a listing of our assets, liabilities, and capital at a specific point in time on September 30th, not on September 29th, not on October 1st, on September 30th. So we have assets. Someone's calling while I'm in my studio here. No respect. All right, what kind of assets do we have? Well, we got cash, right? We have accounts receivable. We have supplies. And we have office equipment. All right. Pick up the cash. That's the 19,410, yeah? Plus the receivables, plus the supplies, and the office equipment. Get a total, I can use that auto sum function here, right? That's my total assets. So I'll give it a little double line because we're not going to add or subtract anything from that number. That's going to be our total assets. So down the road, we're going to get more sophisticated. These will go in a section we're going to call current assets, those that will be converted to cash or used up within a year. And office equipment will go in a separate section we're going to call property, plant, equipment. But for now, all we did was take the left side of our accounting equation, transpose it into a vertical format here. So let's do the liabilities now. Liabilities. We have a grand total of how many liabilities? We have one. Accounts payable. And what is the number? The number is 2750. And then we have our owner's equity. Which is TT Capital. That's Tammie Tubooks, right? Where can I find that number? Well, in two places. One, I can find it up over here, and also over here. I'm going to pull it off the statement on owner's equity, because going forward, you're not going to have that tabular summary. You're not going to have this number unless you prepare a statement on owner's equity. Okay, now we just need a total, right? And we are once again what? Happy as hell, because the total liabilities and owner's equity is equal to the total assets. That's why it's called a balance sheet. It balances, yeah? How's that look? Is this the most amazing thing you've ever seen in your life, or what? I know, you don't have to say. Well, there it is, and I am going to email what I just did to everybody, and I'm hoping that you'll be able to properly prepare this problem over here, which was from the textbook. And one other thing before I forget, and I will forget, any mention of the statement of cash flows in chapter 1 or any other chapter, you can just ignore, because we're not going to do that until ACC 102, statement of cash flows. Okay, there we have it. Signing off for now from my studios in Nassau County.